Welcome to today's exciting journey through the evolution of currency, how we moved from bartering goods to transacting in the digital realm of Bitcoin. This story spans thousands of years, transforming the way we value and exchange goods. So, let's get started. The story of currency begins long before coins and paper money existed. The earliest form of trade was the barter system. In the barter system, people exchanged goods directly, say, a cow for a bushel of wheat. However, this system had many limitations. It depended on what people needed, and there was no way to establish a universal standard of value. That's where the first forms of money came into play. Around 3000 BC in Mesopotamia, people began to use objects such as grains, cattle, and other tangible goods as a form of currency. These items had intrinsic value, but they weren't the most efficient way to conduct trade. Then came the invention of metal currency. The first metal coins appeared in Lydia, modern-day Turkey, around 600 BC. These coins, made of electrum, a natural alloy of gold and silver, became a universal medium of exchange. They were durable, portable, and easy to standardize, making trade much more efficient. But it wasn't just coins. Ancient civilizations like the Egyptians and Chinese also introduced paper money. In China, during the Tang dynasty, 618-907 AD, paper money began to be used for the first time. It was lighter and more convenient than carrying heavy metal coins. As trade routes expanded, especially along the Silk Road, the use of money spread across continents. By the 14th century, paper money had become widely used in many parts of Europe, China, and beyond. The idea of currency was evolving, moving from physical objects to something more abstract. By the 17th century, European banks began issuing the first modern banknotes. These banknotes were backed by precious metals, usually gold or silver, and could be exchanged for physical coins at banks. This concept of paper currency as a promise to pay became the foundation for the banking systems we use today. However, even with the rise of banknotes and coins, currency wasn't always stable. Countries began to experience inflation, and currency values fluctuated based on economic conditions. This led to the establishment of central banks, like the Bank of England, in the 17th century to help stabilize national currencies and manage inflation. Fast forward to the 20th century. The world economy had changed dramatically, and in 1944, the Bretton Woods Agreement established the US dollar as the world's primary reserve currency. This meant that most global transactions were conducted in dollars, and countries' currencies were pegged to the US dollar. But with the end of the Bretton Woods system in 1971, the world moved to a system of floating exchange rates, where the value of currencies was determined by supply and demand in the market. This created an environment where the value of currencies could fluctuate widely. Enter the digital age. In the late 20th century, with the rise of the Internet, we saw the advent of digital currencies, electronic money that could be transferred online. However, digital currencies like PayPal and credit cards were still tied to traditional bank accounts and physical currency. Then came Bitcoin. In 2009, an anonymous individual or group known as Satoshi Nakamoto introduced Bitcoin, the first decentralized digital currency. Unlike traditional currencies, Bitcoin is not issued or controlled by any government or financial institution. Instead, it relies on blockchain technology, a decentralized ledger system that ensures transparency and security in transactions. Bitcoin's value initially started at just a few cents, but by 2017, it skyrocketed to nearly $20,000 per Bitcoin. The introduction of Bitcoin marked a significant shift in how we view money. It wasn't tied to any central bank, and it was based on technology rather than tangible assets like gold or silver. Since Bitcoin's creation, many other cryptocurrencies have emerged, including Ethereum, Ripple, and Litecoin. Each of these digital currencies operates on its own unique platform, but shares the basic principles of decentralization, security, and transparency. Cryptocurrencies have brought about new opportunities but also challenges. While they provide a way to send money across borders instantly and with low fees, they also raise concerns around regulation, security, and volatility. In fact, Bitcoin's value fluctuates dramatically, with prices often changing by thousands of dollars in a matter of hours. In addition to cryptocurrencies, the world has also seen the rise of central bank digital currencies, CBDCs. These are digital versions of traditional currencies issued and regulated by central banks. Countries like China and Sweden are already experimenting with CBDCs, and other nations are closely watching the trend. But what does the future of currency look like? Some experts predict that cryptocurrencies could become a global standard for digital payments, especially as blockchain technology continues to evolve. Others believe that central banks will play a more significant role in regulating digital currencies, creating a balance between the stability of traditional systems and the innovation of new technologies. We may also see the rise of digital currencies tied to physical assets, such as gold or carbon credits. These hybrid currencies could provide the best of both worlds, security and transparency, along with the benefits of decentralization. In conclusion, the evolution of currency from bartering goods to Bitcoin reflects the constant innovation and adaptation of human societies. From the earliest forms of trade to the digital revolution, currency has always been a reflection of the economic, technological, and societal changes of the time. Thank you for joining us on this fascinating journey through history. If you enjoyed learning about the evolution of currency, don't forget to like, comment, and subscribe. Stay tuned for more educational and exciting content.